Hi there, my name is Tom Lee. I'm the newly appointed chairman of BitMine, ticker BMNR. And I want to welcome you to the launch of a monthly video series called The Chairman's Message. The purpose of this Chairman's Message is to keep you abreast of all the updates of BitMine as it builds the world's premier treasury strategy and what we call the Alchemy of 5% once we reach 5% share of all Ethereum tokens. There's some disclaimers I want to highlight, safe harbor and risks. But let's start with the exponential growth story of BitMine itself. It begins after July 8th when the $250 million private placement was closed, and that's when I joined as chairman. And just 18 days later, BitMine holds over $2.7 billion worth of Ethereum and cash. Now, this effort to reach 5% of Ethereum is not being done alone. We have many investment partners. This investment was led by Mosaics, but there's many others on here, including Founders Fund, Pantera, Kraken, Galaxy Digital, GSR, DCG. Now, to walk you through the story, let me start with talking about why Ethereum is potentially the most important macro trade for the next decade. When we announced this Ethereum Treasury strategy, we wanted to become the MicroStrategy of Ethereum because we believed Ethereum is going to start to see its key macro moment, and that all has to do with stablecoins. Stablecoins are the ChatGPT moment for crypto because we've seen widespread adoption of stablecoins by consumers, corporates, and banks. And as you can see from these various headlines, JP Morgan wants to create a stablecoin. Goldman and BMNR want to tokenize money market funds. Walmart and Amazon are looking at issuing their own stablecoins, and Robinhood wants to tokenize a lot of private companies. In addition, there has been a lot of effort mobilized because of the Genius Act, which is setting the stage for a stablecoin boom. This is legislation signed by President Trump earlier this year. Treasury Secretary Bessent thinks stablecoins could become a $4 trillion market. That's more than 10 times bigger than it is today, and that would represent exponential growth in demand for Ethereum. Ethereum, if you're not familiar with it, is a layer 1 blockchain, but what distinguishes it from Bitcoin is that it enables smart contracts. So you can store and do a lot of computing. In fact, Ethereum is the largest smart contract platform by a sizable magnitude, and today is a legally recognized blockchain compliant with US laws. And in fact, the majority of these real-world assets, whether it's stablecoins or other tokens, are actually being created on Ethereum. They have more than a 60% share. So again, growth in stablecoins is a boom for Ethereum. And believe it or not, Ethereum has what they call an inflation rate, or the rate of growth of tokens below that of Bitcoin. Now, the second part of all this is we believe the Ethereum Treasury companies like BitMine are superior to holding Ethereum itself, because we are increasing the Ethereum held per share. And again, Ethereum ETFs do not do that. And more importantly, Ethereum Treasury companies are essentially crypto infrastructure businesses. Let me explain. We can increase your Ethereum held per share because a company can issue stock at a premium to the dollar value held of Ethereum per share. That means you are growing the company's overall holdings of Ethereum. Number two, you can issue convertible bonds or warrants, which take advantage of the inherent volatility of not only the stock, but the underlying volatility of Ethereum. Take a look at this chart. You can see Ethereum has more than 2 times the volatility of Bitcoin, meaning Ethereum treasury companies could actually get really attractive financing for convertible bonds. And in fact, if you look at options pricing, just even 18 months out, Ethereum options have 33% greater implied volatility. Again, that lowers the cost for a company like BitMine if they issue convertible bonds. Number three, the operations of BitMine itself can actually be used to buy more Ethereum. And interestingly, Ethereum generates a staking yield, and those rewards can be used to buy more Ethereum. And finally, there are other crypto treasury companies out there that hold Ethereum, and if they trade at close to net asset value, BitMine could use its stock to acquire another company. Now, you might say to yourself, I don't think uh, something holding a commodity like Ethereum should trade at any multiple to its holdings. Well, there's a lot of precedent for this, and I want to highlight ExxonMobil because ExxonMobil from 1990 to 2018 was the top 5 largest company in the S&P 500. But here's what's interesting. It was never valued on earnings. It was always valued as a multiple of its proven reserves. And as you can see, you could have spent your entire career, graduated college, worked on Wall Street starting in 1990, and then when you retired in 2018, Exxon was still a top 5 stock. Why should that be any different today for crypto, especially given that we are seeing Wall Street financialize the entire financial system onto the blockchain? I think a lot of companies are going to be increasingly valued on the value of their crypto holdings. And more importantly, or equally important, I think crypto companies are actually infrastructure businesses. One, Ethereum is a proof of stake blockchain. So the Ethereum Treasury companies are securing the Ethereum network by staking their holdings. Number two, Ethereum generates a staking yield. That's GAAP revenues for Ethereum Treasury companies. So there's native revenues actually being generated by your holdings. Number three, staking secures the Ethereum network. That means the function of that is cybersecurity or network security. That's a business function that is part of supporting the Ethereum infrastructure. Keep that in mind. And number four, over time, stablecoin issuers and those tokenizing real-world assets, they're going to want to stake ETH because they want to ensure that the layer one blockchain is healthy. That means we believe over time, Goldman Sachs, JP Morgan are going to become large Ethereum holders, and BitMine is getting ahead of that, and especially by trying to acquire 5% of the Ethereum supply. Now, that gets us to the third point about the alchemy of 5%. I got a case study for you. MicroStrategy, okay, saw its stock soar from $13 to $408 from the time it started its Ethereum Bitcoin Treasury strategy in August 2020. So just 5 years later, we saw a tremendous gain of 30 times return. The question is, how much of this return was generated by the rise in Bitcoin versus its treasury strategy itself? Well, Bitcoin was 11,000 when they embarked on this strategy, and today Bitcoin's 118,000. So 11 times of that gain came from the Bitcoin price increase. That means 20x of the 30x return, or the vast majority of the return, was due to its treasury strategy. In fact, we've seen this with Ethereum. Ethereum has risen from the time we announced the strategy from 2,400 to 3,800. So 1.5 times increase, which is pretty good. But as you can see, BitMine, because of its treasury strategy, has actually increased the price by 9.5 times. Okay, well, keep in mind, MicroStrategy achieved that treasury strategy by executing a series of financings that I've listed here, and this is not complete. Okay, well, in the first 6 months of MicroStrategy's Bitcoin strategy, they went from having $240 million of Bitcoin, that was their original purchase, and 6 months later raised $2.7 billion in 6 months, or 180 days. That's a lot of Bitcoin they raised. But take a look at BitMine. BitMine started with $265 million worth of crypto, and just 18 days later has $2.7 billion worth of crypto and cash. That means that BitMine's achieved in 18 days what MicroStrategy did in 180. We are trying to become the Ethereum of MicroStrategy and trying to do this at what looks like a much more rapid pace. And again, that's 18 days versus 180 days. And then gets us to the fourth point. Many of you asked us to provide a net asset value of the crypto holdings. Well, as of July 27th, the company has 600,000 Ethereum tokens, which is worth $2.3 billion, $23 million worth of Bitcoin, treasury cash unencumbered of $369 million, or a total treasury net asset value of $2.7 billion. And divided by fully diluted shares outstanding, that gets you to a $22.84 NAV, or if we're rounding, $23 net asset value. So that is the NAV of the crypto treasury holdings. Now that's changed a lot because on July 8th, there was only $4 of crypto treasury holdings per share. But in the ensuing 18 days, BitMine executed a series of transactions to increase it by $19 per share, creating $2.4 billion of shareholder value. And today gets you to a net asset value of $23 per share, or a 6 times increase in just 18 days. So you can see BitMine is moving very rapidly to increase net asset value per share, or what we call velocity. And of course, you're going to ask us about the future. What is ahead for us? Well, again, we want to get to 5% of Ethereum's token supply, but we're going to do some things in the middle of that. We want to become a Made in America validator network, 100% compliant, but 100% of our operations geographically in the United States. That's very important to us. The second is we want to be a community participant in Ethereum and really strengthen the ecosystem, whether that's working with Pudgy Penguins or the Ethereum Foundation or others. We also know that there's going to be opportunities for us to make selective investments that provide strong upside to shareholder returns, but really our focus is on getting 5% of the Ethereum network. And that is the alchemy of 5%. Thank you for listening, and I'll speak to you soon.